Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, September the 23rd. The year's 2021. Let's talk trading. Only trade one. These videos are for educational purposes only. Your results may differ from mine. I was chatting with Walmall the other day, and we were talking about some video ideas, and he had made the comment that he and I usually try to grab somewhere between 1 and 3 pips. Whereas there's other traders that, look for like maybe a 10 pip minimum, and they've got like a TP of 50. And many times, and I think I told you or shared with you before, that I'll pick a spot and say price is going to get to this point. And what usually happens is I trade in that direction. I wind up taking 1 or 3 or 5 pips and then punch out of the trade. And then, maybe within the hour or within the day, price hits that target. And then I kind of kick myself. But he mentioned that, he goes, well, you can only trade one way. Either you're going to trade for the small pips in and out, or you're going to trade for the big pips. And if you're trading for the small pips, don't get mad when you quote unquote leave pips on the table. I mean, just this morning, not too long ago, I took a short on the pound because I saw it was up here and we had this nice red candle. And what happened was, I got in. I was using our higher low, lower high. Let's see if I remember which one it is. Here we go. I took this trade right here. Actually, if I go to M1, you can probably see what happened. I took this short, and then price moved against me slightly in the zone. And so then when price came down to here, I stayed in the trade, and then right here, I popped out, as opposed to waiting for that candle to close, and you see what happened next. So I was kind of kicking myself, but then again, Walmart reminded me, goes, well, hey, the other day you got one of those trades and it went against you, so you didn't take the pips. I go, yeah, I know. So that's why we say you have to just trade one and stick with it. So I can look at this, and say one of two ways. I can think, hey, I just left all these pips on the table, I screwed up. Or I could say, hey, I made a profitable trade, I have more pips or more money than before I made the trade, so it was successful. And since in this particular case I didn't even have a target, I was just shooting because we had this higher low level, and this was the open of the H1 candle, so it was a bear candle after that big bull candle. So if we switch over, and we had this big bull candle, and then this candle here turned bearish. So, and then it wound up bullish. But the point being is that there was this opportunity, and the same thing repeated itself here, where there was an opportunity. So today's message, in fact, it was this hour that I did it. So today's message is pick one. And I can give you another example where I punched out early. I had a long down at the yearly open. Let's see. When the pound dropped yesterday, where did it go? It was down here at the 41s. I mean, that's 89 pips. I'm kind of kicking myself. But then again, I wasn't thinking about making the big pips. I was just taking the entries. But, there was a part of me thinking, oh, that's the yearly open. But when price is oscillating back and forth here, you don't want to give up too many pips at that level. As you're trading, make sure you're only trading one. So, for example, only trade one method. Don't combine a bunch of methods, especially if you're not profitable. Only trade one pair. You don't need to hop from pair to pair or you might miss trades. Perhaps you only trade in one direction. It can be a green rat or a red rat. You know, with the lowest high and highest low, in a way, we're doing Yale student trades because sometimes we're short, sometimes we're long, but usually we'll have a bias, which was funny. Yesterday, Walmall was, let me think. I think he had a short bias and I had a long bias, and we're looking at the same charts at the same time. And he's looking to go short. I'm looking to go long because he was looking for a break of a low, and I was looking for a reverse off a low. So, there you have it. Two traders looking at the same thing, but seeing it differently. And he said, I wonder why that is. I said, well, it's probably confirmation bias. Because I'm looking at the longs and I'm looking all the reasons I should go long, and this indicator here or this setup there, or there's a target here and it's reversing off of this level or crossing that level, and he's doing the same but for the other direction. So what that goes to show is you also have to look for reasons not to take the trade, and that might be something that is not usual to you. It's something that you probably don't do on a regular basis. Reasons not to enter a trade. Because what are we doing? We're sitting and we're waiting. And what are we waiting for? We're waiting for our signal, or we're waiting for our setup. But what about a reason to say no? And that's something that sometimes isn't easily quantified, because sometimes it's just a gut feeling. So for example, right here, we're at the weekly open. Now, if you look at a weekly chart, and for some strange reason, let's see, where am I? There we go. Weekly chart, we're right there, right at the open. And let's see, we've got two gaps that haven't filled, weekly open gaps. And what is my target? It's this weekly pivot. And it's one of those things where I know in the back of my head that price is probably going to take out that weekly pivot, because we look at these. Okay, where is the pivot chart? It's down here somewhere. Okay, so we're looking at this weekly pivot way up here. We see we took out the weekly pivot that was missed 1, 2, 3 weeks ago, but now we've got this one. And it's the only open pivot this year, and last year we only had two. And then you had to go all the way back to 2014 to find a missed pivot. So yeah, there's some missed pivots, but very infrequently. So right here, right at that open, and then also the daily pivot, there's a missed pivot right here that needs to be closed. So when you're making these targets, and you have to think, is there a reason I shouldn't take that trade? And you look for it. So for example, if you're going short, but there's a pivot, you might be thinking, hey, well, I know that pivot's going to close most likely. So if I go short, I better only take a couple of pips and be thankful. In fact, one of the things that we've been working on trying to figure out with the higher low, lower high method is, how do you not get quote unquote fooled like on a trade like this? Well, I think it's simple, but it takes discipline. This line is green because the H1 is green. So if you're going to reverse off one of these trades, wait for the H1 to be red, like it happened here. So in this hour, when it took that reversal, that H1 was red, and it would have paid off nicely. And so, on the other hand, when do you know not to go long on a red? Well, wait for a 3-ball. Just like here, wait for a 3-ball to show up, because then you know there's been a nice move and there might be a chance for a possible reversal. But you say, yeah, but look at all these 3 balls. I could have maybe taken that trade. Well, then again, that's part of trading. There's no guarantee. You just have to decide, is the risk worth it? Like right now, we've got about 10 minutes left in this hour. Would I take this trade? Maybe, maybe not. One reason not to take the trade would possibly be maybe there's the hourly range isn't that big. But I think in this case we have a 38, so we could say, hey, there's a good chance for a reversal. Then again, it was over 40, and 40 is my launch pad. And so I usually like to take longs at that area, which, by the way, there was something else at this level to point out. I'm trying to remember. Okay. Yeah, we had some pivots that were, there was a missed pivot, I believe right here, daily pivot that needed to be taken out, 37.60. And then there was also a missed pivot. I think there was a missed pivot here that's gotten, no, that one was taken out. Was it an H4 missed pivot? I remember there was another missed pivot somewhere along the lines, and I was saying that probably needs to get taken out. So when you're looking at one thing, you can focus on it a lot simpler than if you're looking on two. It's just like, for example, yeah, I have my dashboard and I have, let's see, 1, 2, 3, 4, 5, technically 6 things I can look at quickly. So for here, for example, it's above the ATR zone. It's crossed above yesterday's high. It's in the upper rat zone. It's 15 pips above the highest H1 open, and it's making a new high this hour. So real quick, I can see that. I can make decisions based off of that. But when I go to trade, I only need one trigger. So even though I'm analyzing, or the computer's doing it for me, it's telling me where price is relative to certain levels, I'm going to make a decision. Do I reverse? Well, I'm in that rat zone. I know price usually wants to come out of that rat zone. So I'll let this candle close, turn it into possibly a holo trade, and then go short at the highest open, because last hour, or actually this hour here, when it opened, you see there was a nice short, and then all of a sudden price turned and reversed. So fellow traders, just focus on one thing, one pair, only have one account, trade one method, and see if that improves your profitability. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks, and please click like and subscribe. I would appreciate it. Thank you. This is the Rumpled One, over and out.